So we're going to turn to a company that actually we last covered on the show about 18 months ago when we were talking about Anglo and BHP. So two unlikely bedfellows, but they've been together for a second time here. It's Property Franchise Group. We're going to talk about some figures which looked pretty good the other day, and the company, as I said at the top, has had a very good year share price-wise. Mark, what did you make of the results?
Well, I was pleasantly surprised. No doubt the shareholders were too, because when you look at the reported figures and the underlying figures, they sort of contrast with general sentiment towards the sector. That was the first point that came to mind. And as if to bear this out, we had the latest RICS survey today, which suggests that private landlords are being driven out of that market, reducing the rental supply, and there's going to be negative implications for tenants as well. But so, yeah, I mean, on that basis, there are a really good set of figures, and it sort of raises the question, with a franchise group such as this, which has a broad service offering across the sector, perhaps because matters are tightening up a bit, it may somewhat counterintuitively work in their favour. Now, they delivered a steep rise in adjusted profits, up 63% to £15.7 million. And the interesting point here is that outstripped the rate of revenue growth as well. All three of its channels saw pretty impressive growth rates during the period, but the licensing revenue saw the steepest rise, but that's coming from a much lower base. The main part of the business, which accounts for about 52% of revenues, was down to franchising, and that was up by a fifth to £21.8 million. But the real story here is the contrast between those results and sentiment towards the property market as a whole.
Yeah, we should give some context as well, shouldn't we? I mean, clearly, as the name suggests, it is a big franchisor operating that estate agent model. Lettings are a big part of the business. I think it's actually the biggest estate agent in the country now, when you include all the outlets under its aegis. But when you look at these figures, I mean, it had the big deal for Belvoir last year, which is part of the reason why some of these figures in absolute terms are so large. But even on a like-for-like basis, it's been growing pretty healthily as well over the past, certainly over the past 6 months, which is what these results are all about. Let's talk about the sales business, though, as well. I mean, that seems to have done fairly well, potentially taking market share there. Equally, we should be mindful of the fact that at the start of this year, there was clearly a bit of a pull forward in activity before the end of the stamp duty holiday. So do we see that side of the business continuing to grow at a pretty good clip? Is there a risk now that things become a bit more moribund, absent any further demand side stimulus of the stamp duty kind that we saw over the past couple of years? What's your thought on that part of the business, first of all?
Yeah, I would definitely agree with you on that point as well. This is a part of the business which is perhaps even more vulnerable. I think part of this as well is because the trajectory of interest rates, or actually more specifically the trajectory of borrowing costs, is no longer quite as predictable as it was at the beginning of the year as well. And lenders themselves might be introducing slightly more onerous terms for borrowers. There's still a structural shortfall in the market, and this is going to continue for the foreseeable future, most certainly. But yeah, that is the vulnerable part of the business at the moment. I guess the agreements that it has in place as the appointed representative of the Mortgage Advice Bureau and Primus Network as well, that's helping the business. So they're sort of grabbing, but I mean, it's particularly with Mortgage Advice Bureau as well, because that's that will definitely be driving volumes their way, and there's decent evidence to suggest this is still happening as well.
Mm.
Arrangement volumes are up by about 7% during the period as well, and lending was up 15%. But I would be surprised if that momentum is maintained through the rest of the year.
Yeah, this is part of the financial services side of the business, which is about 25, a bit more share of revenue, so a decent percentage. Uh, the financial services side, a lot of it is mortgage commission, things like that. So you've got to think refinancing is a big part of that too. And we sometimes forget, I think, don't we, that you consider people on, say, 5-year fixes, they've still got to come off what are going to be still very low rates onto what are much higher rates now, even with the, well, I say with the fall in base rates, with bond yields where they are, they're not going to be as attractive mortgage rates as they were 6-12 months ago necessarily. So therefore, there's the big question of, do these people need mortgage advice, therefore, to work out the best deal? And that could be driving business to the financial services arm in future.
Yeah, that could certainly play out as well. It's probably interesting to note as well that the spread between the base rate and what actual borrowing costs are is likely to increase too. And that's going to inform people's decision-making process, because a lot of people who come off fixed rates, and apparently there's going to be another large sort of chunk at the beginning of next year, they might be thinking that it's worth actually increasing their mortgage payments well above the base rate, in anticipation that if we are faced with a borrowing crisis at the governmental level, that those borrowing costs rather than the base rate will really shoot up as well. So a lot of people might just be willing to pay a little bit over the odds when they come off the fixed rates at the beginning of next year.
Yeah, well, let's talk about the letting side of the business, because that is a big part of it, if not the biggest. And there's varying dynamics at play here. I mean, clearly, when you look at how the company has performed and the shares, it's been doing very well, strong in a relatively weak market. You look at the letting side, though, and there are a couple of things to consider. I think part of the growth case for the company is really taking a lot more market share here, because the idea being, in some ways, that given all the pressures on individual landlords, they might be moving out the market. It therefore might lead to an increase in professional landlords, is the kind of the trend we've been hearing about. And professionals are much more likely to use an agent, such as the Property Franchise Group and its franchisees, for their business. So that could drive a lot more business to them. That said, in these figures, we have seen a bit of a drop in the number of properties managed by the lettings arm, because some landlords have dropped out the market. So we shouldn't forget that smaller landlords moving away could be trickier for the group as well. What's your take on the balance of those two things? I mean, clearly the market is in flux, but it's a bit up in the air as to how it plays out for the company.
Yeah, that description, I think, is fairly accurate as well. The market is certainly in flux at the moment. But there could be some, as I mentioned before, there could be some counterintuitive outcomes here, because, when we talk about private landlords, is that someone with just one property, or maybe, 3 or 4 properties? I mean, they suddenly become a professional landlord under that basis. I think, individual landlords might actually look at a serviced offering as well, because of just some of the complications that could arise because of the proposed renters' rights bill, for instance. Already, private landlords have had to sort of retrofit some of their properties because of environmental or beefed up environmental restriction as well. Mm-hmm. And they might be faced with, some sort of legal hurdles linked to that renters' rights bill. So even if you've just got the one property and you want to keep that just in terms of capital appreciation, you may well just be inclined to get professional help in this regard, just so, it remains a capital asset, even though the projected returns might fall because of the increased government intervention in the market there as well. We saw a slight decline in the number of, it was a slight decline in the number of properties that are managed during the period under review. and presumably the overall number may go down because of these changes in the market. But it'll be just interesting to see what the eventual outcomes, whether they are slightly counterintuitive.
Yeah, and one thing they're doing as well, aren't they, is they've got this privilege program which has been offsetting some of those pressures, which is trying to provide a bit more of an all-in-one service to landlords. I mean, it's clear with the renters' rights bill, things like that, that a lot of landlords, if they haven't already, will have to get their act together. And I think the idea of this program is to say, well, look, we can help you sort out a lot of these issues through this program, through our expertise in the area. Why don't we finish up just with a look at the valuation? The shares have moved a long way. Equally, earnings are growing at a good clip. What's your take on it, Mark?
Yeah, looking at it, it's a little bit cloudy getting a good relative valuation. There are a few companies that are engaged in the industry as well, but perhaps they don't have the breadth. But when you look at probably franchise, it's enterprise trading multiple, it's about 17 times. That's ahead of the median peer average. And you combine with the fact that it's forward rating is about 16 times. And more importantly, it's a PEG ratio, which indicates future growth prospects is just under a 2 multiple as well. So everything appears to be in the share price at the moment. But I think, it's a really interesting narrative that's evolving. And, hopefully we'll come back at that at some point in the future to see how things play out because of the changes to the market.